So we definitely see a big improvement in the office market. We are very active on acquisition fronts as well as on the asset management and leasing front. So over the past 2 years, we've seen a lot of new demand gobbling up the new space as well as existing space. The vacancy is dropping. There's very limited new supply of office space, especially in CBD. So also the incentive packages for tenants are getting smaller, and the terms of the lease, in terms of the length, are getting longer. So that creates, a lot of value for the assets that we currently hold in our portfolio, that we currently manage for our investors. So definitely, office has seen a major rebound in terms of the macro conditions. Also, retail sector, especially the retail parks, because of the consumer sentiment, because of the spending power, and overall upbeat confidence, consumer confidence. We see that those asset classes are definitely in high demand these days. We actually manage quite a bit of portfolio for our clients, and we see that that tenants are really happy with their performance. Obviously, the living sector, PRS, apartments for sale, are on the growth trajectory. So we believe this is still a very strong segment. Logistics has been one of the most resilient segments, commercial segments. So we are also active in that sector. Data centers, that's another sector that we've been active, and we see a lot of potential, obviously fueled by AI demand. So yeah, I think all these sectors are on our radar, and we focus on finding the right opportunities. Obviously, we are very selective, and we work with a lot of investors that obviously have to share our view. Poland has been the standout in terms of the growth story for many years. I got to Poland in 2005, and it's been nothing but rising economy, rising consumption. So we believe that the fundamentals of Polish economy are still very strong. We still are very competitive versus the Western countries. We still have a big population, and the growth is going to be driven by new investments, by innovation. We are becoming more and more innovative economy. And low unemployment and relatively low inflation. I think all those factors will help with the future growth. I think from our perspective, what we've been doing over the past 10, 11 years has been transitioning into a fully integrated, vertically integrated real estate platform. So becoming a place where you actually can execute the transaction from A through Z, starting from acquisition to leasing, development, construction management, asset management, providing all kinds of services like facility management, property management, marketing management. I think that's where we see a lot of opportunities in terms of how to differentiate yourself from the competition. I think investors really put a lot of emphasis on having one stop shop where all the services are provided in-house, and that's what we've been focusing on over the past 11 years, where we did a management buyout from AIG, and we are just trying to be the most integrated real estate platform.